This is Randy Finney with the right side of the chart, and today is Tuesday, April 24th, 2018. This is a closing market wrap. Quite a bit of movement in the markets today, so let's look at what happened, where we might head next. This is a 60-minute chart of NQ, the Nasdaq 100 futures. Same chart posted last night that, was to try to reinforce the case that we would likely bounce. Yesterday we had that stop rate. What I'm looking at here, I'm trying to hover right here on that 66.48 level, that purple support line. And yesterday we had taken that out in what I figured would be a stop clearing run, but obviously the stops, it didn't clear them all. They must have been quite a bit more just below that. So you can see what happened when that level went. So, I expected more of a rally from here today. And we started the day up, and then the market reversed. We had a slew of, of course, we had Alphabet reporting last night, and they beat expectations. We had the majority of the economic reports this morning were good. There was one bad one, a regional manufacturing survey. Everything else was positive. But the markets, they don't need a reason to sell. And this also shows the character of the market. When a market wants to go down, bad news is bad news, and good news is bad news. Just like when a market wants to go up, good news is good news, and bad news is also good news. In other words, it rallies on any news or sells off in the case when it wants to go down. Now, so near term, that's not good at all. That was a pretty ugly candle today, but I want to put it in perspective and take a look at the daily charts because I am seeing some significant developments there as well. And earlier today, I had posted some supports on the SPY, which we smashed right through there. It was weird, but we saw a huge disconnect, an unusually large disconnect between the Nasdaq 100 and the S&P 500 today. At one point, I noticed the Nasdaq 100 was down literally twice as much as the Qs were. I'm sorry, as SP or ES, the E-minis or SPY, and they still closed down quite a bit more, but. It's all about lately there was market leading FANG stocks, Facebook, Amazon, Alphabet, Microsoft, and which one did I leave out? The G was the Alphabet. Um, Either way, those five top components of the QQQ. And, we have a couple more reporting. In fact, we have two more reporting on Thursday after the bell, as well as Intel. So I think Thursday, I'm going from memory, is Microsoft, Intel, and Amazon, of course. Yeah, and that's a big one there. So those have yet to report, but they were down today in sympathy with Alphabet that reported last night. Again, even though, last night after hours, there was a big move in Alphabet, a big jump up and a big reversal right back down to about where it closed the day. So I didn't listen in on the conference call or read any notes. I don't know if they gave any negative guidance after the close, but I doubt it. That would have probably come, or I should say after the after-hour session. That should have came yesterday and been reflected in last night's aftermarket trading. So let's move on. Let's focus on price here. So the bottom line is we closed at support. This is the level I highlighted. It's actually more of a support zone right here. Around 64.80, give or take. And that's where the Qs closed. And we stopped cold there and traded throughout in the last hour or so of trading right along that level. And you can see that we did have, when I first posted it, we had potential divergence on the PPO, but that was taken out. PPO's made a lower low. RSI divergence hanging on by just a hair if we can reverse tomorrow. So let's look at the Qs for a second here, because I know a lot of you guys trade the QQQs in lieu of the futures. I just like the futures. They tell a bigger picture of what's going on around the clock. You don't have all the gaps and everything on QQQ. So bigger picture is this. We zoom in, again, basically the same chart when we're looking at QQQs. There was that little, what I thought would do the trick for a stop clearing move below 160, yesterday, followed by the bounce. And at one point this morning, we were up higher at the open, and then we came back down. And from that point, stop after stop, it's usually a vicious cycle once you start having the stops hit. If there were that many placed, and that led to this big move down. But we did fall to support. And here's what I wanted to point out. When we go to a 60-minute chart, let me try to find a clean board here that doesn't have annotations on it. Here's what I wanted to show you. The move so far off the highs, we expected a top here. I mentioned that closing out longs, going short. Didn't know how far down it would go. Didn't expect it to go this far, but I want to just put things in perspective. This shows going back into early January. So we had the January lows. This is a continuation of that rally into the highs in January on QQQ. I just want to show you a quick tool that I use. I'll draw a trend line on a move down. And what that's going to do is measure the percentage drop there. So if I put the crosshairs at the top, move down, and pop-up box on the left shows that so far from those highs last week, we've dropped about 5.5% to today's lows. And then if you move that trend line, it will show you the same. It'll kind of put that move down in relation to the previous move. So here was a big correction on the way up after that first leg down. We had a sharp move off the lows there, a little bit of a consolidation right here where this arrow is, but that's where that initial run up terminated. It was like an ABC correction here, or move up, not correction, a rally. Then a move down, which I just showed you, was about what we just had now, followed by another thrust up. We've also had quite a few other drops about the same distance. Again, if you measure from high to low, don't just look at the slope of the line. This drop here was about the same as well. So I wanted to just point out that this is the new norm. This is what happens when volatility increases. Sharp legs down, sharp legs up, and let's not read too much into it is what I'm trying to say. Now, I wasn't crazy about what happened today. It went against what I was reading in the charts, so that definitely chips away at the bullish case unless the markets can regain those levels soon. And what levels I'm talking about are really this 161. I'm sorry, I have so many lines here, but call it 161.70. In other words, we need to get back above today's highs. Or yesterday's close, or both, and we need to do it soon, or else the bearish case continues to strengthen. So we did fall at support. There is potential divergence on the RSI on the futures. We are oversold here on the 60 minutes. This is more of the same of what's been going on. Not every day do we have such a down day. Qs were down 2.12%, but SPY was down only 1.32%. So not a huge day, again, relatively speaking to what we've seen in the past few months. There's also some support there on SPY. But what concerns me, again, if we don't reverse soon, this may be just another quick impulsive pullback within a bigger trend. What I don't like is the posture of the PPO here. It's one of the most simple yet effective trend indicators out there. Again, you've heard me talk about it. Unless you're new to the site, I use this 9 EMA, which is a signal line, the last of the two to cross, and I look at it in relation to the zero line, that dotted line there. So when the 9 EMA crosses below, the trend is bearish. You had a trend here. It might not look like much on this chart, but it was a decent, especially in time, not so much in price, but it was a downtrend. We had a little dip below there. Actually, it goes to the left of the chart. It's not going to show well. But that's what I wanted to point out. So that trend indicator has been bearish. And we can also look at the PPO as well, the entire PPO, both the PPO line and the signal line, that blue line. And you can see that it's moved up and now it is curling back down after breaking below this zero line. So once broken, that zero line often acts as resistance when tested from below, just as it acts, like you can see back here in time, it acts as support when tested from above. So once a trend is bullish, you look for pullbacks to that level, and usually it will continue to tell you, okay, we had a successful test of the zero line, another successful test, the trend remains bullish. So that is something I don't like. Forget about that. That wasn't divergence there because we never made a higher high in SPY, but we did in QQQ. Try to queue up that chart here. There it is. So you can see QQQ did have that divergent high on the daily chart. We had negative divergence, and you can look at the PPO. It was moving higher, and the PPO is rolled over. The signal line is still well below the zero line. And what's pretty ugly is we have a potential, any more downside in the markets, we're going to have a bearish crossover on the PPO, meaning this blue line, the PPO line, will cross down below the signal line. Now, you can put up a histogram. I can do that for you, or just show you anytime you see these two lines cross, what I'll do is just put little arrows and you can look, you had a bearish crossover right here. And you can see that from that point we dropped. We had a bullish crossover there shortly after the lows that told you the trend was up. And so we have this potential bearish cross. There was a bullish cross right here. Again, you get out to the daily charts and the signals are going to come after the bottom or top, but the 60-minute will give you a heads up, and that's why I always jump around back and forth to these time frames. So another way to tell if they've crossed, simply put up a histogram. There's a PPO histogram. So you can see now, again, if I put the lines there, when it's green, the trend indicator is bullish, and when it's red, the trend is bearish. And so we're still green now. Looks like a bearish cross is imminent, but sometimes it looks that way, and you have a little whipsaw signal or it bounces. So I just wanted to again say, the same thing I've been saying for a while now. Not every day. Today is one of those days where the markets are once again in a precarious technical posture. You can see an uptrend line here. I have two variations. This yellow is the last of the two to go. That's a trend line on QQQ. Let's even go back. Let's look at another chart here. Let's go back to this chart on a 2-day period. You can see that trend line coming off the 2015 lows. So there it is, at trend line support, trend indicators threatening a bearish crossover, but we haven't had it yet. And most importantly, if you really take a step back, although the bearish evidence is building and did build with today's move, but we're still within this trading range that we've been in for the last few months. You might have just noticed on a different board that I had here, I had an alternative drawing for that head and shoulders pattern. Okay, here it is. So earlier I'm playing around with the necklines here. Some trend line drawing is subjective. Somebody asked me on the site the other day, do I have a video? And no, I plan to do that soon. I think trend line drawing is more of an art than a science. But I try to capture as many candlestick tops or bottoms, either the wicks, these skinny parts, and or the bodies. And sometimes you can exclude these quick moves, these intraday breaks on a daily. You can exclude these candlestick tails right here, or the shadows, that skinny part. So that would have been one neckline drawing, but let's take that one away for now. And let's focus on this one. We can have a down sloping neckline, which is actually more bearish. I just want to say this. On head and shoulders topping patterns, you can have a horizontal neckline. You can have an upward or downward sloping. If we do this downward sloping trend line, you can see it's capturing some reactions from below there. You have to just exclude that brief meltdown at the end of that initial sell-off down into the early February lows, and then you come in here and capture that. And what this does, it's just another take on this potential pattern because it fell short of what would have been a nice right shoulder, a very symmetrical right shoulder had we gone up a little more using that horizontal neckline. So now that didn't happen, this is one possibility. And again, I'm laying out scenarios here. I know it sucks to have bullish and bearish scenarios, but is what it is right now. There's a lot going on in the markets. A lot of short-term intermediate trend indicators are rolling to bearish, but you still have long-term trend indicators on bullish. And throughout this bull market, during each and every correction, the same story. First, you're going to have those short-term sell signals, trend indicators, and all that trigger. And then when it starts to look like the market's going to go a whole lot lower, that's when it ends or has ended in the past. But I keep saying this, we're 9+ years into the second longest bull market in history. And so statistically, it's going to come to an end sooner or later, but that doesn't mean that it has to now. It doesn't mean this can't go on to be the longest bull market in history. But right now, things are getting uglier and uglier, and if we continue to move down impulsively, I mentioned that as a criteria on a head and shoulders pattern on the formation of the right shoulder, which is somewhat pretty symmetrical right now. I could have drawn it out like that, but it doesn't matter. You don't have to have exact perfect symmetry. But the important thing is we did have a high volume today, and in yesterday's volume was above average too on the selling. So that is meeting that criteria, what you want to see. Again, if you didn't catch my previous videos, the volume criteria for head and shoulders pattern is volume expansion on the formation of the head, the move down off the top of the head to the neckline, and volume expansion once again on the move off the right shoulder, not the left shoulder, just these two levels. And so far, that's what's going on here. So there's a level to watch, and you can look at a downward sloping neckline. I'm sure a lot of people are talking about this pattern. The only thing that bothers me about it is it's almost too perfect, and often when too many eyes see the same thing, it doesn't play out. But just because of that doesn't mean it can't, and you have to respect it because right now it's certainly looking that way. And if we didn't have this PPO rolling over here, that only adds to the bearish case. Let me get rid of this histogram. So essentially that's it. Again, I don't want to read too much more into this. We'll have to watch what happens. I was long yesterday. I had when we had that little fake down. I put a stop. We had no reason to come back in. When we started to rally, I had two stops. One was hit right after the open. The other was set just below that because there was no business. The markets had no business coming back in again, breaking this support and breaking below that level. So I'm going to sit back now and watch what happens here. We hit support. There's potential divergence there. There was also some developments I posted on the trading room on the 5-minute chart, which I'll show you here. This is a 5-minute chart of QQQ, and then we'll wrap this video up. It started, there was this a downtrend line, and again, this is I posted this as potential day trading op if you wanted a quick pop if it came above there. We did break above it, and we took out this level here, but we fell back down. And what I was looking at, initially, this is that sideways grind right here. It took, oh goodness, it was more than an hour from about this point here. If I measure the time, it was let's see, nope. Well, 2 hours. 2 hours of trading at the end of the day where the market hit that support, didn't go any higher, didn't go any lower. So this is a to be continued thing, to be continued tomorrow. That's a consolidation range at support. We had a potential buying climax. You can see some big volume here under that big surge in volume. That was not a buying climax. I'm sorry, a potential selling climax. Forget about all these spikes. This is what I said in the trading room. You're always going to get a big volume surge into the close. That is because ETFs and mutual fund, index tracking mutual funds, they must square away all their positions, rebalance at the end of the day. So you get a surge of order flows in the last few minutes of trading every day in the market. So don't ever pay much attention. That's normal. In fact, volume should look like a smile from the morning. You have it goes down and then ramps up in the afternoon. That's normal. But what you can look for intraday are these spikes that sometimes will indicate, and this is a 5-minute chart, so it might indicate a near-term selling climax in this case, or after an extended rally, if you get a volume surge intraday, that may indicate a buying climax. But we'll just have to see what happens tomorrow. Like I said, if we continue much lower, and we're talking percentage points, especially some red closes, if this market can't reverse and get back above, undo all of today's technical damage, undo that red candle, undo those potential rollovers. We have the PPO turning down, about to cross bearish. It hasn't done so yet. And if it does, is that a be all end all 100% sell signal? No, it's not, because sometimes you have a bearish crossover or the lines kiss and then reverse shortly, reverse right when they kiss or shortly thereafter. But I can just say this, with each and every tick lower now, the bearish case increases. But again, if you take a step back and look at the bigger picture, and that is the market is grinding around in a range. We haven't yet taken out the recent lows. This is the range that we're in right now. So, and this move down today, as ugly as it was in QQQ, again, not as bad SPY. It's just more of the norm. This is the new norm now with volatility expanding. So let's wrap it up here, to be continued. For the members of the site, I'm going to be around in the morning before the markets open and then away from my desk throughout most of the trading day, coming back in. I don't think I'll be back until probably after the market closes. So if I can check in throughout the day, I'll do my best, but I'll take a look at the futures in the morning before we open and give you an update and see how things look, and then I'll follow up with a market wrap. This has been Randy Finney with Right Side of the Chart. Hope you enjoy.